Opportunity Calls with Ellen Volpe is sponsored by LongIsland.com.
This is Opportunity Calls, and I'm Bob Mittleman, sitting in for Ellen Volpe. I'm joined by Jeff Behounek of the Meadowbrook Financial Mortgage Bankers Corp. Jeff, thank you so much for joining me today.
Hey, Bob. How are you? Thanks so much for having me.
Jeff, you're in the mortgage business, and during COVID, I don't think that there's any business that's been busier. It really hasn't been affected that much during COVID, except that it has gotten busier with all the movement and the low rates and stuff like that. So let's cover some things. Is that okay?
Absolutely.
So what are the benefits of putting 20% down and perhaps paying PMI to reserve assets?
Right now, there's a huge first-time homebuyer boom, and there's a lot of people that are very qualified on a monthly income basis, but they don't have a bunch of assets available. And a lot of times, with credit scores being higher than they've been in history statistically, a lot of mortgage insurance companies are prorating their mortgage insurance premiums based off of credit score and a couple other parameters, but it can be very affordable. So, a lot of people that have this omen against not putting 20% down because PMI is the devil, it's just not the case anymore. A lot of people, you can take these 5% down programs and you can pay $100 a month and you don't have to save up $80,000 to buy a house. And especially with increasing values on homes in the area, a lot of times that PMI is falling off between 3 and 5 years anyway. So financially, it can be very beneficial to speak to somebody who knows those ins and outs and give you good advice to really, make an educated decision and not listen to the old, red flags of the past.
So Jeff, what are some of the valuable exemptions, we'll say, for first-time home buyers?
There's a couple of things. So being out on the East End, I'm out in Eastern Riches. I do a lot of East End lending, and there's 5 townships out here that outside east of Brookhaven, the township of Brookhaven, that require a Behounek Bay land tax. And it's a very hefty expense. So there's a little bit of a formula that goes into it based off of the sales price of the home, and there's a percentage that's taken off of that. But it's an additional closing cost on top of everything else. And a lot of people don't realize that there's an exemption form for first-time home buyers where they can wipe that out. There's some other ones that are through like a Long Island Housing Partnership, things like that you can qualify for on your own. It's outside of the actual lender. You could Google first-time home buyer exemptions. There's a couple of ones that come up pretty quickly. Behounek Bay is a really big one that if you're buying on the East End, definitely look that up or inquire with a lender on the East End.
Jeff, what I love is that you're not just a mortgage person, you're an educator. And I think, helping people out in these times, and I didn't know that. So that's great information. Thank you. Changes during COVID regarding underwriting guidelines and stuff like that.
There's been a lot of moving parts with that side of the industry. The biggest one is for self-employed clientele. There have been massive changes in the underwriting for people that fall within that sector. So biggest is now they're requiring audited P&L and balance sheets. So the CPA actually has to get involved thoroughly, analyzing bank statements, doing cash flow analysis. The underwriters doing their own cash flow analysis. We're not just going off of a 2-year income average, which is what was done previously in the past, for the past 2 years of tax returns. So they're actually looking at bank statements, looking at deposits, making sure it's matching up to what the CPAs have on these P&Ls and balance sheets. And then on top of that, they also want to see future contracts provided to see that work is still continuing after these deposits are made, that they have work in the pipeline, not just, taking their word for it, so to speak. So that's a big one. A lot of the verifications have to be renewed a lot sooner. So some things that used to be are valid for 30 days are now having to be done every 10 days. Pay stubs are only valid for 10 days. Verifications of employment are being done multiple times prior to closing to make sure there haven't been any changes to employment. So it's been a lot of ups and downs. It's been a roller coaster, but I guess under the circumstances, that's all you can do. We're all kind of going through this together. It's all uncharted territory. So that's a couple of things that we've been going through, but we've been tackling it pretty well, and people seem to be understanding of it. So it hasn't really caused any major issues, and things have been working out for the most part. Thank God. So.
Jeff, you've been doing this a while. What's your prediction? I know it's just a prediction, but where do you see rates going?
They're going to be here for at least another year. Everybody across the board, from Fannie Mae to actual big bank investing, forecasting with Wells Fargo and Chase, all the people are saying that national average is going to be definitely around 3% until the end of 2021. So for anybody that didn't buy or refinance, you're still going to have a shot for a while. Don't wait too long, but the rates are going to stay in the high 2s, low 3s for at least another year. A couple people are actually saying until 2022. They think 2 years is going to be a 3% prediction. I had a couple of articles that I was doing some research on earlier, and Fannie Mae and Freddie Mac think 3% is a very healthy average till the end of 2022. The Mortgage Banking Association does not. They think that it's going to be somewhere in the 3.5 to 3.875 range, looking at a 2-year model. But coming full circle, they're still going to stay relatively low for at least another year to 2 years. So we don't have to panic about any type of interest rate hikes anytime soon.
Jeff, the forbearance program has been very popular during these COVID times. The companies that have mortgages out there to their clients and the consumers are doing the right thing, right? So where do you see this going once this gets dissolved?
Well, defaults are at an all-time high. Even as of July of 2020, so not even halfway through COVID, already 1 in 5 households have already missed the mortgage payments. So the forbearances were needed, and they're issuing them through June of 2021. So they're still continuing to issue them, further. I think there is going to be a big wave of foreclosures. I'm not sure if they're going to be issuing like a COVID forgiveness program kind of moving forward. A lot of the forbearance programs were really good because it lets you, you don't have to pay in full once the first payment is reenacted, which was good. You can kind of they'll prorate it over the remaining term of the loan or build it as like a balloon payment at the end. But there's definitely going to be a lot of discussion through the Federal Housing Administration and, Fannie and Freddie and all of them when it comes time to start and the foreclosure courts reopen, because they're not even open yet. So that, when that stuff all comes to fruition, there's going to be a lot of discussion on what they're going to do with all the people that were in forbearance, the people that are in default. Do we continue with the foreclosure proceeding? Is there a forgiveness issued? It's going to be interesting. I personally don't know. I don't know.
What separates you from your competition, Jeff?
It's not about the money. It's not about taking advantage of people. It's not about any type of financial gain. I mean, it's, making money is important. You have to make money to have a living and to, sustain, a well-balanced life. But money is an accessory to me. It's about the customer. It's about how I can better your experience. What services am I providing that are going to make your experience better and set you up to be in a better position moving forward, especially when you buy a house. Probably the biggest financial purchase anybody will ever make in their entire life. And their, well-being should be the number one thing at the forefront of everything from the first step. And that's always my game plan. That's always the way that I've handled it from the beginning. That's my first thought process. And that's just how I am. Do unto others.
Jeff, I love that. And I'm all about the experience, Jeff. And Jeff Behounek is one of those people that he's not about the dollar. He's about doing the right thing by the client and making sure they're set up. It's not about making the sale. And I think that's so critical, particularly with a mortgage, particularly with a home purchase or a refi for that matter. It's a high pressure situation. And so kudos to you, my friend. Jeff, how has your ABA membership affected you both professionally and personally?
Good question. Well, ABA, I think, has been one of the best business decisions that I made all of 2020. Bob, I really appreciate how you kind of took me under your wing, a little bit of a mentorship. We had some really great meetings early on. You gave me some great pointers on areas that I was lacking in terms of follow-up and who I should be going after for different referral sources and the type of people that I was going after and the people that I wasn't even think of that could be huge, that could add huge value to the business that I'm building. So from a business side, and personally, I kind of was overlapping. I think that was an amazing decision from the beginning. I have no regrets. I'm still excited. It's still engaging. Every time we have a meeting, you learn something. You meet somebody new. They bring in a different party that might add whatever resources to the group as a whole. It really acts as a friend group and a business group. It's not just something you show up to and have a bagel and a coffee and say, hi, my name's Jeff from Meadowbrook. give me business. It's like, hey, let's meet up for coffee. What are you doing on Wednesday? What's going on in the North Fork? Like, there's a couple of people, Ike and other real estate agents in the group that we talk regularly, and we talk about what's going on in our little pockets because things are so different. So I think it's been invaluable from a business and a personal standpoint. If anybody is considering joining an ABA group, I would highly recommend it as a young professional.
Jeff, thank you about those kind words about me. I'll be showing it to my wife after this takes over.
No problem at all, Bob.
Jeff Behounek from Meadowbrook, thank you so much for joining me today.
No problem at all, Bob. Thank you so much for having me.
Opportunity Calls with Ellen Volpe is sponsored by LongIsland.com. American Business Associates is New York Metro's premier business development and networking association. To learn more about ABA, visit aba-ny.com.